بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. السلام عليكم ورحمة الله تعالى وبركاته. And welcome to Takaful online course. And today we have the resolutions number 47 of the SSC of the Central Bank of Malaysia. And this resolution talk about the Re-Takaful with the conventional insurance and reinsurance company. So basically, we just try to go through the case, then we go to the standard resolutions on that. So the resolutions says that the Re-Takaful arrangement is one of the method of Takaful company to mitigate its burdens of risk in providing coverage to Takaful participant. So basically, as you know, Re-Takaful is above the Takaful. So Takaful is dealing with the participant individuals. Re-Takaful are dealing with the company itself, which are institutions. And this with the objective to manage and mitigate the risk. So it's basically, it's referred to sharing the risk between the Takaful company and another Takaful, a Re-Takaful company or insurance, a reinsurance company with an effective Re-Takaful arrangements. So basically it's a kind of risk sharing because the Takaful cannot take the entire risk. So what they will do, they share part of the risk with the reinsurance in order to basically mitigate that risk, and the Takaful operators underwrite the risk within its capacity. And this is with the objective to sustain the risk fund and don't compromise on it as it's belong the participants. So one of the obligations of the Takaful as agents to the participant is to do a proper evaluations of the impact and the risk of the risk fund. So this is one of the method to manage the risk, whereby you share part of it with the Re-Takaful to maintain a good status of risk fund. Then it says the Takaful company reinsurance with the effective arrangements, Re-Takaful arrangements. The Takaful company may increase its capacity and stabilize its underwriting performance. So basically, as we mentioned, it stabilize its underwriting and performance because of this, as well as able to preserve the Takaful fund from a significant financial claim burden should be an expected volume of claims. So this is one of the reasons, is to protect the risk fund from a very substantial and significant claim that may basically impact significantly the risk fund. And because of that, as a part of the risk, so basically the Takaful will cede part of its risk to the Re-Takaful with these objectives. Now, in addition to that, they are saying, or the resolution says that a Re-Takaful arrangement is usually conducted via two main methods. So the way or the arrangements of the Re-Takaful is done through two methods. The first one is the inward, and the second one is the outward. Now, the inward Takaful basically is, in brief, is basically inwards Takaful is whereby the Takaful company accept risk. So inwards, to be brief, the inwards is to accept the risk, and outward is basically to share or transfer the risk to a third party. Meaning that to cede out a part of the risk to other parties. So the resolutions is basically looking at these issues, whether acceptance of inward Re-Takaful, again, we are talking about two aspects: inward Takaful, meaning accepting the risk, and outward, basically Takaful, which is basically cede out and share part of the risk to a third party. So the issue and the discussions is that whether acceptance of inward Re-Takaful by the Takaful company or a treaty on a treaty or a facultative basis from a conventional insurance is permissible, meaning whether the inward takaful, Re-Takaful is permissible. The second one is whether the distributions of risk through outward Re-Takaful to a conventional insurance company is permissible. Again, the issue is whether you can accept, in other words, in a different language, whether the Re-Takaful can accept the reinsurance business, which is the inward, and whether the Re-Takaful can basically do reinsurance with the conventional reinsurance, meaning accept risk or share the risk or distribute the risk with the reinsurance. So the resolutions of the meeting 47 meetings on February 14, 2005 has basically resolved the following points. Number one, a takaful company is not allowed to accept inward Re-Takaful, whether on a treaty or a facultative, meaning both approach is not allowed, from a conventional insurance company and reinsurance company. So basically the resolution is that Re-Takaful cannot, or a takaful cannot accept Re-Takaful, inwards Re-Takaful from a conventional insurance. Which means it can accept only from takaful. From takaful company, from a Sharia compliance takaful operator entity, but accepting from a conventional insurance or reinsurance, that one is not allowed. That's the inward part. Now, the second one, which is basically distributions and sharing the risk to a third party, which is the reinsurance with the third party, which is the outward. Basically, a takaful company is given the flexibility to distribute its risk based on outward takaful to conventional insurance company and reinsurance company subject to the following, meaning that it is permissible subject to some conditions. In other words, the inwards acceptance of the conventional reinsurance is not allowed. However, sharing or distribute the risk or seed out your risk or part of it to the reinsurance company is allowed with some conditions. Number one, priority shall be given to Re-Takaful company and takaful company a Re-Takaful company, meaning that when you don't have capacity enough to accept all the risk and you want to distribute part of it and share part of it to a third party, so you have to give a priority first to the takaful company and the Re-Takaful company. If you fail to get any positive response from takaful or Re-Takaful, that's where you can go to the reinsurance. So the number one, so the priority wise, you have to look for the Re-Takaful company as a priority, as a first course of actions. When you go through all the Re-Takaful, and the result will be that no Re-Takaful is able to share part of the risk, no one can underwrite your risk, at that point you can move to the reinsurance. The point number two is that non-existence of takaful company, a Re-Takaful company, either locally or internationally, that's viewed as a capable to absorb the distributor risk. So here we are talking about sometimes a very specialized risk, whereby some of the Re-Takaful, they are not specialized in this risk, and as a result of that, they don't take it. So it is not within the scope of the Re-Takaful to underwrite that particular risk, and sometimes basically because of the rating, whereby the Re-Takaful doesn't fall within the categorized rating and determined rating that the Re-Takaful want to go for it. So number two, basically the non-existence of a Re-Takaful that can underwrite that risk. And the third one, basically the strength of the takaful company, a Re-Takaful company, either locally or internationally, is doubtful, meaning that, as I mentioned it just now, the capability, the strength, the soundness which is normally reflected in a form of rating. So normally when you go for Re-Takaful or reinsurance, you have a specific rating of that particular reinsurance or Re-Takaful in order for you to share the risk. If they fall below that rating, meaning their strength, their soundness is doubtful, as a result of that you cannot jeopardize and put the business at risk as a result of that. Now, just to summarize, before we go to some of the justification, is that we have two types of Re-Takaful. We have the inward takaful and outward takaful. So the inward resolution says you cannot take and accept the risk of the reinsurance business. When it comes to sharing and seed out part of the risk to the reinsurance, it is allowed, subject to some conditions. One of them is a priority should be given, of course, to the takaful, Re-Takaful. Number two is that the risk or the takaful, they don't accept and take that kind of risk, the non-existence of the Re-Takaful with that specific and specialized risk. And thirdly, basically the strength and the capacity and the soundness of the what's called the Re-Takaful, they don't meet that some kind of requirements. And as a result of that, you may go to the reinsurance based on the necessity and based on haja that basically will be treated as a necessity from a Sharia standpoint. And normally, in case that the Sharia board give this kind of permissibility for the takaful to go for the reinsurance, normally it is given on a 6 months or most of the time in a 1 year basis, meaning that they will table to the Sharia board the list of reinsurance that they want to contract with them. They want to cede part of the risk to them, and they will give the justification that all this basically kind of risk they are not falling within the scope of the Re-Takaful, and the Re-Takaful did not accept, did not acknowledge, did not basically wants to take this risk. So they move to this kind of reinsurance, and the Sharia board will give that kind of endorsement. So there is a kind of Sharia governance process, there is a kind of SOP to follow in order for the takaful operator to cede out part of its risk to the reinsurance. And this one normally will be given within a 1 year time. Then it will be on a yearly basis. Sometimes the list of reinsurance will be reduced. Depends on the circumstances and how the Re-Takaful business is expanding and expanding its capacity and emerging maybe a new entities locally, internationally. And sometimes also the list may be expanded and increased because of the new sophisticated business comes in, and sometimes some Re-Takaful may close down, and maybe the industry of Re-Takaful may be shrink. So all these circumstances, basically, it depends how is the market will go, and on a yearly basis, a proper assessment from the Sharia departments, supported of course by the underwriting departments, and see basically the convenience whether you go to Re-Takaful or not based on that kind of survey and justifications and SOP and conditions. Now, some of the basis ruling that's given on that, definitely for accepting the inwards takaful from the reinsurance, this one is not accepted, because if you do so, you are recognizing the business model, and you are recognizing the reinsurance business, which is actually, in fact, is a not Sharia compliance business, and there is no need basically for it to take it. Yes, it is an additional business, but additional business that doesn't fall within the scope of the permissibility that you may generate return and profit out of it. That's why it has to be rejected. And the other point is that this is a kind of supporting the business, conventional business, which is the reinsurance. And وَتَعَاوَنُوا عَلَى الْبِرِّ وَالتَّقْوَى, we should help each other in something good, not in something which is not Sharia compliant. When it comes to the outward Re-Takaful on the insurance, this one is based on the Al-Haja and based on Darura, whereby in order for the Takaful company to maintain the healthiness of the risk fund and make sure that risk fund is safe and sound, and not impacted or significantly impacted with the big volumes of claim as a result of that. So it is a part of the business practice that a part of the risk will be shared with a third-party provider. Of course, the priority will be given to the Re-Takaful, but in case the capacity is not there or a scope is not within the Re-Takaful, or the Re-Takaful are not able to undertake that kind of risk, so they may go to a reinsurance base, again, as we mentioned, based on specific SOP, based on a specific Sharia governor requirements, and based on kind of monitoring on a yearly basis to make sure basically everything has been taken care of within the interests of the shareholders company and fulfilling the Sharia requirements. So normally this is done under the supervisions, monitorings, and guidance of the Sharia committee. With that, thank you very much. Inshallah, in the coming session in Takaful. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.